September 19th, 2024. Today we gapped up to around the all-time high, which was right here. And whenever you get, I thought one of the big problems with selling below one is reasonable to do because whenever you get a big gap up and a bear bar closing near its low, in general, there's a 30% chance that that's just going to be the high of the day and we're going to get a bear trend. However, in this situation, the all-time high was maybe another 5, 6 points away from the open. And usually when you're that close to the all-time high, you have to test it. So while it's reasonable to sell below one, we might only get a couple of legs sideways to down rather than a bear trend. I'm gonna make a video on this at some point, but a lot of times in spiking channels, when you have a spike, like you can see that we have a spike 56, 57, 58. And a lot of times the channel just goes for a leg two of the spike. It's really common. You can see that we had the spike down and then the pullback and then leg two started. So some type of measured move that you get from these is often a leg one pullback, leg two, rather than just a measured move straight down or something like this. R1, a bear bar closing near its low. Like I said, in general, when you gap up and get a big bear bar closing near its low, there's a 30% chance that it's the high of the day. With this being a factor, the all-time high, it might have been more like a 20% chance that it was the high of the day still, like any other given bar, maybe 25%, but it's still credible to sell below the low of one. We might have to get below yesterday's high, which is right here. If we do close the gap with yesterday's high, that increases the chances that it will not be a big bull trend day. When you get a big bull, or when you get a large gap up, there is about a 30% chance of a bull trend day. There's a slightly higher chance of a bull trend day than a bear trend day when you get a large gap up. And in this situation, when you get a gap up that's this large, it's usually a weaker bull trend. So it usually doesn't go straight up, it goes sideways to up like it did today. So one, a big bear bar closing near its low. Two, another bear bar, but a big tail on the bottom. Probably buyers not too far below, probably sellers not too far above. Traders who sell above two and are willing to scale in should make money if we go above two. And if you sold below one, two isn't really ideal follow through. It's follow through, but it's really not as good as it could be. So probably better to just wait. Three, another bear bar closing near its low. So we have a big bear bar one, a pause bar two, and then another big bear bar three. So we're probably going at least a little bit lower after three consecutive bear bars. However, only two of them are closing on or near their lows. Whenever you get a pause bar, so you get a big bear bar, a pause bar, and then another big bear bar, that increases the chances that you might go a little more sideways to down rather than just straight down. Bar four, a bear bar, but big tail on a bull bar, but a tail on the top. It's, if it closes on its high, it's maybe a possible low of the day. But the problem with buying is you'd be buying against three bear bars and you'd be buying reasonably far above the moving average. So there's probably sellers not too far above bar four if we get there. We did now overlap with Wednesday's high. So the traders who scaled in the Globex session, they bought and they scaled in higher. They were able to make money during bar four. Bar five, another bear bar, but a big tail on the bottom. We haven't traded above another bull or above another bar yet today. So we'll probably do that pretty soon, but there's going to be sellers above since the first five bars were no bar is traded above another bar. So a 5-bar bear micro channel. However, spike, pause, spike, pause, spike. So one, pause, two, pause, three. It's a parabolic wedge bottom. So five is a parabolic wedge. So it's probably better not to sell above it. However, with the 5-bar bear micro channel, traders who sell above will probably be able to scale in and make money. It was a really pretty choppy day and kind of difficult for stop orders for the most part. Anyways, so five, a parabolic wedge bottom, but I don't think most traders are going to buy above five since it's a bear bar and we have 5 bear bar micro channel down to this point. 6, a bull bar, but a big tail on the top. We're probably going at least a little bit higher after bar 6. Keep in mind, from the low of bar 5 to the high of bar 6 is a pretty large reversal, right? That's a, 10, 15 point reversal? Yeah, like a 16-point reversal from the low of bar 5 to the high of bar 6. So that is going to be enough for a second leg up. If you buy the close of 6, I would not. There's a tail, so probably just not worth it. You're also entering an area around the 50% pullback where there's probably going to be some sellers. So probably just better to wait. 7, consecutive bull bars. However, 7 has a big tail on the top, so really not much of a buy the close bar. This isn't really a very good environment to be doing much. You know that the gap up from Thursday acts as a bull spike, so we're going to get a second leg up from the spike on Thursday, and this might be the beginning of the second leg up. However, I'm not sure how much higher we're going to go. We're not getting good-looking bull bars closing on their highs. Instead, we're getting okay bull bars, 6 big tail, 7 big tail. So it's really not all that great. 8, a bear bar closing near its low. It's a double top, 1 and 8. It's a lower high double top, I suppose. However, I don't really want to sell. After 3 legs down, the bar 1, 3, 5, which is a parabolic wedge, we're probably going to get a second leg sideways to up. So 6, 7 is the first leg up, and you should be expecting a second leg up. So not worth selling below the low 1 short below 8, betting this is a bear trend and you might get a second leg down. 9, a bull bar, but a big tail on the top and a tail on the bottom. Do you buy here? I probably would not. I think that buying here, this is really not a great area to be long. This looks more like a trading range than a bull or a bear trend. So I'd probably just rather wait. At this point, I think we're going to the all-time high, but it's kind of hard to buy, create a profitable trader's equation to buy to get to the all-time high. Let's see, if you bought 9, even then, the all-time high is 57.85, so you're not even getting 1-to-1 to that area. But traders know we're most likely going to test it. We have 2 legs up, 6, 7, pull back 8, 9. So if you're buying 9, you're buying the top of second leg up in what is probably a trading range. So maybe not all that great. However, the channel up from the 5 low to the 10 high is pretty tight. So we're probably going to get at least a little bit more to the upside. 11, a bear bar, but a big tail on the bottom. So not really worth shorting. It's a low 2 short for the bears. They see a lower high and a low 2 short, but it's not really all that good. And then 12, a bull surprise. So 1, pullback, 2, pullback, 3. 12 looks like a parabolic wedge to me. I'm not buying it. If you look at 12, it's a really big bull bar and it closes above the bar 1 high and has all that going for it. But we had a parabolic wedge to the downside, 1, pullback, 3, pullback, 5. Now we have a parabolic wedge to the upside, 7, pullback, 11, pullback, 12. And if you're buying 12, you're buying 2 points away, a little over 2 points away from the all-time high, and you're risking 10 to 12 points at least. Yeah, probably more like 15 points. So you have a serious resistance point 2 or 3 points above you, and you're buying with 13 points of risk. That's really not a very good idea. So that's why a lot of the bulls who took the buy, let's see if they made 5 points. So they were at the exact high of 13 high is the bulls who bought above 12 that were able to make 5 points. So they took the buy and they just scalped out with 5 points. The reason being the all-time high is right here, and that they know that initially when you trigger a new all-time high, it's gonna usually pull back first. So when you trigger, something like this, that the market's probably going to pull back first. Where is it going to pull back to? Well, in general, when you get a sell climax or a buy climax, 12, 13, 60% chance of one more leg up, and then 60% chance of it being the end of the bull move, and you try to test back down to the bar 12 low. Bar 12 low being the buy climax low. So I think we're probably going back down to the buy climax low, the bar 12 low. So 13, relatively disappointing follow through if you think about it. If you had bought above 12, hoping for a swing trade, you wanted to see 13 basically be the same size as 12. And instead, 13 has a large tail on the top. So what do I think? Well, I think we're going to close the gap with the bar 1 high. The 13 low is just above the bar 1 high. So you can see we're probably going to at least get back to this point. We might get all the way back down to the bar 5 high. The bears who sold, although it wasn't a good idea to sell above it because 3 pushes down, some traders will, and they scaled in, and they should probably make money, or at least be able to avoid a loss. We have not touched the moving average yet today, so we are probably going to do that at some point. But you can see the big thing that the bulls had going for them most of the day is that we never got below the moving average until later in the day. So until bulls started to give up. 14, a bear bar. You can see initially buyers below 13 scaling in, but they're really just scaling in because consecutive bull bars, 12, 13, it's a parabolic wedge top. So buying below 14, not really all that great, same way that selling above 5 is. 15, a big bear bar, but a tail on the bottom. We might be selling off back to the bar 12 low. We also closed the gap with this high, the bar 11 high. So 15, a bear bar. We might be trying to get back to the bar 12 low, the buy climax low. 16, another bear bar. So we have 3 bear bars, but they all have tails. So down 14, up 14, down 15, up 15, and then down 16. So it's a possible parabolic wedge. We moved down in 3 pushes, and then we moved up in 3 pushes. So that's it's fair to think that we're getting another parabolic wedge on a lower time frame. 16, like I said, possible third, another parabolic wedge. It's 3 straight bear bars, so there's going to be sellers above 16. If we go above 16, the bulls are looking to form a higher low from this bull leg up. This bull leg up is stronger than the bear leg down, and we had a large gap up, so I would say we are still always in long. I think we were always in long by the close of maybe bar 7 or bar 9, and we probably stayed always in long until bar 57, 58. But even then, it wasn't very good, always in short. So 16, 17, a bear bar. It's an inside bar, a low one short for the bears. After possible parabolic wedge, they want to break out below the wedge and a measure move down. However, it's hard to sell the close of 17 because you're selling a bar with a tail on the bottom and you're selling in an area where there might be support. We haven't gone below the moving average yet today. We're probably around in the area of 50% pullback, a little bit below. So probably buyers below 17, scaling it lower. You can see disappointment 18. So if a bear sold below 17, and well, the ways to manage it would be you scale in a lot and you get out a lot later in the day, or you sell below 17, you get disappointment 18, and you just scalp out. So 18 is not good follow through if you sold below 17. A lot of those traders were hoping for a climactic break below the wedge. Instead, they got a doji bar. So a lot of traders will just start buying back shorts at the market, and that's what's causing the outside up bar on 19. Do you buy above 19? I probably would not. It's a big bar, a big risk. And after 4 straight bear bars, 14, 15, 16, 17, or 5 bars without a bear close, without a bull close, we're probably going to get a second leg down. So 20, you can see buyers below 19, probably going to get a second leg up. So bulls buy below 19 during 20. We're probably going to go sideways to down, I think a little bit more. I thought we would start testing the moving average here, but instead we get 21, a bull bar, tight trading range though, 5 bar tight trading range here. Not really worth doing anything. The bulls see a high 2, high 1, pullback high 2, but I don't want to buy above 21 after this strong move down. So, and this is not a very good bar, so really not worth it. Good moves usually start with good signal bars. 22, a good looking bull bar, but could be a wedge 1, 2, 3, and you're in an area where there might be more sellers than buyers. But we're mostly getting good looking bull bars today more than bear bars. So bulls have better closes so far today, and we haven't gone below the moving average, or we haven't closed below the moving average. So good for the bulls, a lot of support for the bulls. 23, consecutive bull bars, 22, 23. We're probably going at least a little bit higher, but we might have to pull back first. You can see we ended up pulling back to the 22 low, which is its own buy climax. So you could argue the buy climax is 21, 22, 23, but 22 was the bull surprise. So you could argue that just bar 22 is its own buy climax. So that's why we tested that low. 24, disappointment. The bears, they want head and shoulders, left shoulder, head, right shoulder. But I don't know if that's really going to happen. We need to go below the moving average first, and their signal bar 24 has a large tail on the bottom, so it's really not worth it. Probably buyers below. 25 goes below 24, but and triggers the sell, so the theoretical head and shoulders top. Bulls, they see possibly a failed breakout above a wedge 1, 2, 3, but 21, 22, 23 they know is strong enough to get a second leg up. So the bulls buying are going to scale in pretty relentlessly, knowing they're going to get a second leg up, and they know that the bulls are going to buy the first time we get it close below the moving average. 26, an inside bar, so it's a high 1 for the bulls, 21, 22, 23, and then 26, inside bar, high 1 buy. But I don't really want to buy above a bar with a huge tail on the top. Probably better not to. You can see we get sellers above initially during 27. So probably just better to wait and be patient. What are you looking for at this point? Well, the bulls have not let the market fall below the moving average. So you're probably looking for a bull bar closing near its high, and that's pretty much it. If we're going to get below the moving average, we're going to do so in a pretty obvious fashion. So you can wait for that as well. But I think for the most part here, you just wait to see if we can get the bull bar closing on its high. 29, so tail, 26, 27, 28 tails, a possible wedge, like I said, 17, 19, and 23, I suppose, at this point. 28 is the second leg up for the bulls. So bulls bought the close, they scaled in, and they're using the rally here to exit their longs, part of what's causing 29. But 29 sells off to the moving average and bulls are willing to buy it. So you can see, even though the bears are getting good bear bars, they're still not able to get a close below the moving average. 30, you can see we're getting higher lows. So we got, this is a higher low from the gap. We got another higher low, another higher low. We got a higher high and a higher high. I thought we might get a possible wedge with these, but we did not end up getting it. 31, a big bull bar closing near its high. It does close above the bar 24 high and the bar 28 high. So that's important, right? That's a break above resistance. So increases the chances that we're going to get a breakout and some sort of measured move up. Really what you can do is just hold always in long until we get a breakout. Usually on days like this, you'll end up getting a climactic breakout towards the end of the rally. So the market will get a little bit more parabolic. The final bears will give up. And this is a spot where bulls will normally take profits. But if you're buying here, the problem with 31 is it's a big bar with big risk. So you're taking big risk and you're buying kind of towards the top of a potential trading range. And look at how the day has moved so far. So we're going up, yes, but it's not like we're rallying straight up. We're going up in a choppy manner. So it's kind of difficult to buy above 31. But you can definitely do it for a swing. There are magnets above, like the all-time high and the bar 13 close, and we're getting higher lows, and we still have not had a close below the moving average. 32 consecutive bull bars. Some bulls, weren't as interested in buying above 31, so maybe they'll buy a 50% pullback of 31 and 32 during 33. Some traders were concerned that 31 was going to be a bull trap, or 32 is going to be a big bear bar closing your flow, trapping in bulls, so they waited to buy a 50% pullback during 33. 34, a bull. Let me just grab some water. The reality is we are always in long. There might be sellers above scaling and higher. They should make money. Sell climax high up here. So magnets, a lot of magnets above 13 close. 35, an inside bar, but probably better just to wait and not do anything. Again, we're always in long. Bulls can buy for any reason and just hold and just wait until we close below the moving average to exit. Or when we start to get, if you're getting a day like this where it's staying above the moving average, but it's not doing so in a strong fashion, it's like this, and you keep kind of touching it but never going below it. It's obvious to traders that we're going to get below the moving average at some point. So what usually ends up happening is you get something like this around bar 50, and then the market just reverses around as opposed to 2 o'clock or bar 54. Sometimes it's as late as 2:30 or bar 61. So 34, a bull bar 35, bear bar, but not really worth shorting. Bears want a low 2 short, but this is just, we're slowly working higher. 36, another bull bar. Good for the bulls, but I don't know how much higher we're going. And we go up 37, and then we get disappointment. So big tail once we go up on 37. A lot of bulls scalped out at the new high, and bears knew that they're going to be able to sell and scale in, and they're probably going to make money. 38, there's going to be buyers below 37 during 38. No one wants to sell below this. There's going to be buyers below for at least a scalp. Probably sellers above 38. 39, a bull bar, but a doji bar. So we have doji bar 37, doji bar 39. Probably sellers not too far above, probably buyers not too far below. Another doji bar 40. You can see we're trying to break out. Again, I think this was a wedge, 1, 2, 3. We're trying to break out above it. I'm not sure we're going to be able to. So 40, another doji bar. We have 4 straight doji bars now. So this is a final flag. So usually when you get a final flag, you'll get a breakout above it and then a reversal back into it. Hence, I think the breakout above 48, 49, 50, 51, and then reversal back into the final flag. So 41, another doji bar. So we have 5 straight doji bars. This is going to be a magnet later in the day. And then some bulls exited, causing 42. However, bulls were still willing to buy the moving average, betting we're going to get a breakout above the final flag and then reverse back into it. 43, an inside bar, a high 1 for the bulls. You can buy it, but it's really not all that great. I'm not sure we're going that much higher. I would have a set number of points to take profit at, maybe 10 points at the max. I'm not even sure if you got 10 points at this point. Okay, they did make 10 points, but 44, disappointing follow through a doji bar. So in the past 8 bars, we have 6 dojis, really not that great. Buyers below 44 during 45, probably sellers not too far above 45. 46, a bull bar, but a tail on the top. So really not all that great. You can see we're at resistance as we have been for most of the, basically the same area we stalled in 12 is the same area we stalled, 13 is the same area we stalled, 37 is the same area we stalled, 40 is the same area we're stalling now. An outside down bar, 47, but not worth selling until we get below the moving average. 48, another bull bar, You can see the bulls who bought the close of 46 scaled in below 47, use 48 to exit. IOI pattern. 46 is inside of 47, and 48 is inside of 47. It's a breakout mode pattern. Follow through 49. So consecutive bull bars, but big tails on the top. It's okay to be holding, again, buying closes because you're just taking a chance that we don't get below the moving average. And you can exit when you get a big bear bar closing near its low. It was a small pullback bull trend. All the pullbacks were one or two bear bars, and none of them closing on or near their lows until up here after we got the parabolic move. 50, a good bull bar closing near its high. It's okay to buy, but you're probably taking it for a scalp. 51 consecutive bull bars, really parabolic, hard to buy up here. If you are buying, I think 52 is disappointing. You can see bulls, they know we're probably going to pull back, but 48 through 52 is a lot of bull bars, and we've still been above moving average all day. So they do buy below 52, but they're only doing so for a scalp, and they probably scalp out during 53. 54, a bear bar closing near its low. I would not sell below 54, but I would exit longs personally. I think that after that many bull bars, you might go a little more sideways to down. If you're going to sell below 54, I'd use a little bit of a wider stop because the reality is there's probably sellers above the 53 high. 55, disappointment. It's a high one for the bulls, but we've gone up too far, so I would probably just rather wait. 56, a bull bear bar closing near its low. Do you sell below 56? You probably can. I think it's just difficult to sell on these days. And then you get consecutive bear bars, 57. So sell the close 56, 57. You can sell below 57. But are you expecting a major reversal here? Probably not. So if you're not expecting a major reversal, a lot of traders just look to scalp. And that's exactly what happened. What caused such a large tail on 58 is even though 56, 57 is really strong, traders know we're probably not going to get a major reversal out of this. So they'll buy back shorts somewhere down here, causing the tail 58. 59, a bull bar closing near its high. It's, do you buy above it? I probably would not after 3 straight bear bars, but it is the first close below moving average. So we do have the gap bar in here. 60 consecutive bull bars. You can see any bear who sold the close of 58 taking a chance we collapse down 59, disappointed in 59 and using 60 to buy back their short. 60, a bull bar closing near its high, but I think it's mostly just bears buying back shorts. It's going to get a second leg up. 61, an inside bar, a high one for the bulls, hoping that we're going to resume the bull trend, but we're probably going to get a lower high from 56, 57, 58. 62, a bull bar, but really not worth buying. Possible wedge, so not worth doing anything. 63, low too short for the bears, but I'm not selling. Possible second leg. 64, a big bear bar closing near its low, but it's not worth taking short unless you get follow through. So I would wait to see if we get follow through. If you do sell below 64, 65 is disappointing. Higher low double bottom, 58 and 65. Bulls are hoping to buy. 40% chance maybe we get a measure move up. However, it's really big bar, big risk, and it looks like a trading range, so I'm not doing it. And if you did sell below 64, 65 is disappointing. They use 66 and they buy back shorts. You get a bull bar closing near its high. 67, you can see we sold off and then rallied again on 67 up to the bar 64 high, so probably sellers up in that area. And then 68, an inside bar, a low one short for the bears, probably buyers not too far below. And then 69 consecutive bear bars, but after 3 bull bars, not all that great. If you do sell it, you're just looking for like a 5-point scalp. Like it's not an area, you're in a weak bear channel, right? So if you're selling below here, you probably just try to scalp with 5 points. You would have gotten it, but that's pretty much all you can ask for in that situation because there's going to be traders buying below 65, buying below 58, scaling in lower. 70, a bear bar, but a big tail on the top and the bottom, so not as good as it could be. And then 71, a big reversal up. Probably buyers if we go below, but not really great to buy above, even if it is a wedge because it's such a large bar and such large risk. 72, an inside bar, a low one short, but not worth doing. And then we just went sideways the remainder of the day. For stop orders, not many. 10 was probably fine. Maybe 17, but if you get 18, you probably got to just get out. 31 probably was the best trade of the day, or 32. And then you just hold. You could probably buy the close 51, 52, or sorry, 50, 51, but you got to be quick to get out. Exit below 54, maybe sell 56, 57, maybe 69, but that's pretty much it. Traders were more interested in trading on limit orders today. So probably buyers below 32, probably buyers below 37, probably buyers below 28, but a couple legs up, 17, 23, 28. So I would rather not. New breakout, 31, 32. So better to buy below 52. Probably buyers below 44, but not great. I would not buy below 51 or 52. If you do, it's a really quick scalp. And that would probably be it for me if I was going to trade on limit orders. On the daily chart, turn on extended hours. So you can see it's a bull bar with a reasonably good close, but 1 pullback, 2 pullback, 3. It's true that we have a bull micro channel, 7-bar bull micro channel, and we just tested the all-time high. So even if we get a bear bar closing near its low, they'll probably be buyers not too far below. Maybe this is a wedge, 1, 2, 3. So I do think eventually we'll get back into this area. I think I don't think we've seen 5,000 for the last time. So I do think we're getting back to 5,000 at some point. But I'm just not sure exactly when. The weekly chart, this year, we're up, 18%. That's way more than normal. So if the year finishes up 25%, we're obviously not going to do that forever. You can see we have 5 straight bull bars on the monthly chart, but we're initially getting sellers above this bar. Could be, leg 1, pull back, leg 2. And that's actually right about where we are. I also noticed on the daily chart, this one's easier to see without the extended hours, but if you look, we have a leg 1 and a leg 2. And the leg 2, not very surprising, is right at 6,000. So 6,000 is the target. However, probably going to be some profit taking before we get to 6,000. The weekly chart tomorrow is Friday, so the bulls want to get as good of a bull close as possible. The bears want to make this as sideways of a bar as possible. So they're going to try and get down to at least the midpoint. So I would pay attention to the midpoint of the week and to this high, the 57.29.25 high. All right.